Starting a new business is exciting, but it also comes with responsibilities, including managing your tax obligations. Whether you're launching a small side hustle, opening an LLC, or forming a corporation, understanding how business taxes work is essential to avoiding penalties and keeping your company financially healthy. Here's a simple guide to handling taxes for your new business in 2025. Your business structure determines how you are taxed. The most common options are sole proprietorship. Income passes through to your personal tax return. That's Schedule C. Easiest to start, but no liability protection. Partnership. Profits and losses pass through to partners. Requires Form 1065 and K-1s. LLC, whether single or multi-member, has pass-through taxation by default, but LLCs can elect S-Corp status for potential tax savings. Corporation, or C-Corp, is taxed separately at the corporate tax rate of 21%. This can lead to double taxation, but offers the strongest liability protection. Choosing the right structure really sets the foundation for your tax strategy. SK Tax Associates can help you figure out the best fit based on your goals. An employer identification number, or EIN, is required for things like hiring employees, opening business bank accounts, and, of course, filing taxes. You can actually apply for free on irs.gov. Even solopreneurs, benefit from having one for credibility and keeping your finances separate. Mixing funds creates accounting problems and, honestly, tax headaches too. Open a business bank account and use it for all income and expenses. This makes deductions easier to track and, it protects your business identity. Depending on your business type, you may need to file income tax, both federal and state. There's also self-employment tax, which covers Social Security and Medicare. If you have employees, you'll need to handle payroll taxes. If you sell taxable goods or services, you might owe sales tax. And for certain industries, excise taxes could apply. Not all businesses pay the same taxes, so knowing your obligations early really helps prevent surprises. So, common deductions for new businesses include things like office supplies, the home office deduction software and tools, business insurance, and also travel and meals. Though, keep in mind, only 50% of those are deductible. Advertising and marketing costs are another big one, as well as equipment and depreciation. And don't forget, you can deduct up to $5,000 in startup costs, which is pretty helpful when you're just getting started. Here's the thing. Good bookkeeping really means bigger tax savings. So using accounting software like QuickBooks, Wave, or Zoho Books can make a huge difference when it comes to tracking your expenses and making tax time a whole lot easier. If you expect to owe $1,000 or more in taxes, the IRS actually requires you to make quarterly estimated tax payments. These payments cover both your income tax and self-employment tax. And, just so you know, the deadlines for these are April 15th, June 15th, September 15th, and January 15th. It's important to mark those dates on your calendar so you don't get caught off guard. Missing payments can lead to penalties, so, plan ahead. Hiring employees adds responsibilities like withholding federal and state income tax. You'll also need to pay employer Social Security and Medicare, file payroll returns, and provide W-2s and 1099s. Honestly, a lot of new businesses outsource payroll just to avoid errors. Some LLCs and corporations can actually reduce taxes by electing S-Corp status. This lets owners pay themselves a reasonable salary and then take additional profits as distributions, which, often lowers self-employment taxes. Handling taxes for a new business may feel overwhelming, but with the right setup and ongoing planning, you can definitely stay compliant and maximize savings. Keeping records, understanding your obligations, and choosing the right structure are, well, key steps toward long-term success. SK Tax Associates helps new businesses manage bookkeeping, entity formation, payroll, and business tax filing, so you can focus on, growing your company.